You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 26th day of June, 2017. Hope you had a great weekend. I'm sure you had lots of quality time with your family. Yeah? Right? I didn't see you on church on Sunday because I actually wasn't there, but I'm glad you were. So, a new week ahead of us. We certainly had some overnight activity. If you can see the screen I have up, S&P 500 Emini Futures. You can see I've highlighted the Sunday night Globex Open, 6 p.m. Eastern. And we had an alert out for the Concierge Trade Alert clients to consider being long at 24.34. We put in a high this morning off the opening bell. This candle, this big green candle, began at 9:30 a.m. and ended at 10 a.m. Eastern. You've heard me say many times that somewhere between 10 minutes to the top of the hour and 10 minutes after 10 a.m. that if the market has had a directional bias since the opening bell, that is a time period that you want to watch and see if the market might have a change of direction, which will carry it into the noon hour. Actually, this carried us up to about 11:30, and then this is the 11:30 to 12 noon candle, and now we're just starting the 12 noon. So pretty good move, 13.5 points. If you are unable to see the chart that I have up right now, you can go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions, and within about 30 seconds you'll be able to see the screens and access the chat box. It's better if you do it on the first day of the month. This way you enjoy one-click access for the entire month. You actually get an email an hour before the show starts that reminds you the show starts in an hour, and when you're ready, click the link in that email and it just brings you right in. No registrations again till the next month. Okay, now there's also the other option, and that's youtube.com/CFRN. upper left hand corner, click live, and when the show's live you'll be taken right to the charts, and there's also a chat box over there. Okay, all right, so from 24.34 to 13.5, I'm sorry, from 24.34 to 47.5, that's 13.5 points. S&P points, $50 per point. They pay the same as soybeans. I am always saying that soybeans pay the same as the S&P. I'll spin it around today so that I can bring up the fact that we have rolled forward into November soybeans, which tend to be the kindest beans of all. And last night when I sent the alerts out, I forgot to roll, and then it dawned on me, and so I sent out the correction with the correct month for soybeans, and I actually got them out. The market doesn't open until 8 p.m. Eastern. I think I got the alert out, or the correction out, about 7:30 Eastern, so no worries there. Okay, it is about this time each and every day that I welcome back those returning and send out a special welcome to those of you that might be here for the very first time. I'm going to run through the global markets real quick. We'll start here in the US. These are cash markets, and then we'll go to Michael for a recap of what happened today in the live training room. Let's start here in the US. The Dow is currently up 35 points. NASDAQ is down 8.5. S&P 500 is up a little over 4. And the Russell 2000 is up almost 1 point. No movers, no shakers, just pretty quiet. In the commodity basket, crude oil up 36 cents, trading 43.37 last. Gold down $12.40, trading 12.44 last. Friday afternoon going into the close, it looked like gold was preparing to put on one heck of a rally. Okay, and so I mapped it out, but I said, you know what, we're only going to test the market here. We're going to use a $2 stop loss, which with gold that equates to $200 per contract. Something, although it really looked good for a rally to the upside, I struggled with the entry point, you know, and I finally went with the lesser of the two. The initial reaction would have presented better results, but the point was, out of the last 3 swing trades that I kept track of, one we pulled out early because the market was flattening out and we had, I believe, a rollover involved. So that crude trade had a $3,000 target, but at $2,000 we said both here on the radio show and then that following night, or the same night in the partners workshop, price was still kind of just flatlining in the same area. And I said, you know what, guys, if anyone still hasn't taken profits here at this level, if you're in the trade, I think it might be a good idea. Now, of course, the market did continue to fall and drop and ultimately hit that target price, but everyone that participated was out. So if you walked from that trade with the 2,000 profit, and if you were stopped out on the other 2, because I think we put out 3 at one time. No. We put out 2 and then we put out another one. And we had a $400 stop loss on each one of those. So that's $800. That left you with a $1,200 net out of the 3 trades. Well, now we're at 4 trades, okay? One was a quote-unquote successful trade, although we did not hold it through all the way to the target or recommend holding it to the target. We just erred on the side of caution. But even still, we've got 1 out of 4, and because we only risked $200 on Friday in that trade idea that we put out on Twitter and I think also on the Google Plus page, we still have $1,000 to work with. Okay, so this swing trading business, again, whole different ball game. It is for the discretionary trader, for the individual who is learning how to trade. What you really need more than anything is you need to first learn rules-based trading, okay, where there's no guessing, there's no ifs, ands, buts. It's all cold, hard rules. You're never scratching your head going, I wonder if, because if you are, and you truly have a rules-based system like what we use in the live training room each day, then the only reason you would be scratching your head is because there's some part of the strategy that you haven't quite yet become familiar with, or you haven't asked the question. That's why we're always encouraging you, whether it's in the live training room or in a partner's workshop, ask questions. Ask until there's nothing left to ask, because it is such a simple trading methodology. Trading's not easy, but it can be simple, and I believe that what we've put together is the simplest. There is no easy in trading, but the simplest trading methodology that you're going to find. Does that mean you'll learn it overnight and be knocking it out of the park? No. Can you get the basics of it pretty quick? I think most people can. But we're not trying to knock it out of the park, honestly. We have a realistic daily goal. And for us, hitting it out of the park simply means that we are consistent with our humble, realistic daily goal. That's our version of hitting it out of the park. Some solve the market equation, or attempt to, with more points. We, on the other hand, believe that the solution to the market equation is best found through more contracts, with the understanding, with the caveat that you begin, once you've proved yourself consistently profitable in sim, you go live with just one little contract. I know that's very humbling for some people, but remember, God loves a humble man. And then with that one contract, and this won't happen overnight, it can't, you earn the money required to trade the second contract. But wait, I got money in my account. Why do I gotta wait? Because we said so. No, because you have money in your account, and that's where we would like to see you keep it, quite frankly. And so if you follow the formula, the 24/20 blueprint, what that's designed to do is to take you from 1 to 20 contracts over a period of 24 months. So, I mean, there's no overnight in 24 months. Okay, well, I guess there's a whole lot of overnights in 24 months. But you get my point. Every additional contract that you add, if it's underwritten, paid for, financed by profits you earned in the market, what you're doing is you're building a trading business with a firm foundation underneath it. And once that firm foundation is in place, then it's one brick at a time. It's solid. Every wind that blows down the street with a new indicator, a new oscillator, a new way of looking at things. Trust me, there's nothing new in the markets. Nothing. Okay? And so if you're still on that hunt, where you Google late into the hours, into the wee hours of the morning, Googling for that one thing, that one indicator, that one oscillator, that one filter that you know is out there somewhere, and if you just had that one thing, you'd always be right, you'd never be wrong, and soon you'd be changing zip codes. Because the houses in your zip code don't have garages big enough for that fleet of cars that you yearn for. Just kidding. But to get my point, we approach this thing completely differently, on the back of a rules-based trading methodology. And once you learn to become a rules-based trader, and you are actually consistently profitable in the market, well then, this discretionary business, where you're able to simply read a chart, understand where the buyers are, understand where the sellers are, and from experience and understanding human nature, human emotion, you have a pretty doggone good idea of not what the market's going to do or what price is going to do, because the market and price unto itself does nothing. On Saturday, there were no traders trading, so guess what? The market didn't move a tick. See? So you're not so much trading price or the market. It's the individuals on the other side of the keyboard. And now I know that sometimes it's not an individual, it's not a person, it's not somebody with a mullet or a shaved head. It's a computer. Okay? Computer was programmed to behave in a certain manner based upon a given set of conditions and circumstances by somebody with a mullet or a shaved head or something in between. That's where you're headed. That's what your goal is. And there's no way you can learn that overnight. I wish there was. The late night TV guy who promises to teach you how to trade in 5 days for a mere $7,000. Man, I wish that were possible. We would train you like that in a heartbeat. But unfortunately, it isn't. So, we train you in the way that actually makes sense, that gives you an opportunity to learn how to trade. And learning how to trade is like learning how to drive. Once you own that, once you possess that, nobody can ever take it away from you. Okay? Not the markets, not some guy with a new idea, not a president that everybody doesn't agree with. I mean, these are probably some of the most difficult trading times that we've seen in, I don't know, perhaps 2005 when I started. I don't know what went on before then. I was trading equities, but in the world of futures, this has been some of the most difficult. But there's 13.5 points. There was a little something on Friday. You know, a big something today for the S&P. Now, when I say a big something, I want you to bear in mind that historically, the S&P, literally since its inception, the Emini, has averaged 20 points from the low of the day to the high of the day. Historically, that has been the average true range, 20 points. Does it go in a straight line? Absolutely not. It goes up and then it goes down. It goes up and it goes down and up and down. And these are 30-minute candles. So inside of these 30-minute candles, if you go to a smaller time frame, like a 1 minute, you'll see a whole lot of up and down going on inside of what looks like, you know, just a straight up. Now, this could be the rare occasion. If you go look, it actually does just go straight up. But check a couple other candles, and you'll quickly see what I mean if you haven't, if you aren't already aware of that. Because see, each day in the audience, just as each day in the training room, and even in the partners workshops, we have new traders, we have traders who've been at it for 10 years, and people all in between. So just trying to give you a basic outlook here at the beginning of the week of who we are, what we do, and how we go about doing it. Now, that may topple some sacred cow that you have. That may not live up to the unrealistic expectations that you have because of some shady website that led you down a primrose path. So wherever you get your education, just be careful and make sure that you get a education, a real education, one that helps you understand how the markets work. Okay, that's the very best advice that I can give you. If you're on our trial, please, pay attention in class, ask lots of questions, make sure you run the simulator, run the indicators, so that at the end of the week, you know whether or not this is going to be right for you. If you had a 5-day trial, you only showed up 2.5 days, you never bothered to install the indicators and learn how to trade with them, well then at the end of the 5-day trial, you're just in the same place you were a week ago. You're no closer to being that consistently profitable trader that you want to be. At least if you show up every day and pay attention and use the indicators, you may come to the conclusion at the end of the week that, gee, I don't think this is for me. Now, if it's because of time frames, I mean, that's, I can show you how to fix that in a heartbeat. Our methodology and our indicators work as well on the range chart that we use as they do on volume charts and minute charts and hourly charts and daily charts, because that's how markets work. They are fractal in nature. If you don't know what that means, that's a great question to ask tomorrow morning. If you're listening to the broadcast and you've not taken a trial, go to apply.cfrn.net, apply.cfrn.net, fill out the little form, name and email is all it takes. When you get you'll get 2 emails, a short one and a long one. The long one has some pretty in-depth instructions. It's going to point you to a web page where you'll be able to get the indicators up and running. If your platform's not compatible, you'll have a couple of options available to you for a demo platform. which comes with live data. Our indicators are just built right in. If you go the Ninja route, we turn them on for you. And if you go the DT Pro route, you kind of turn them on yourself. But the information on that page that the email points you to, it's got all the instructions, it's got videos, and of course it's got contact numbers where you can call for help in the process. All right, so real quick, let's get through the rest of these markets. In the Asian markets, the Nikkei closed positive, up 21 points on the day. Shanghai closed up 28 points, almost 1%. Hang Seng closed up 201 points, and that's 0.75%. So a nice green day in the Asian markets. Same thing for the European markets. Nothing huge, but green nonetheless. FTSE closed up 23 points. The DAX closed up 37 points. And the CAC closed up 29 points, which is a little over 0.5%. So Asia was green, Europe was green, and the US at the moment is mixed due to the fact that the NASDAQ is down almost 10 points. Dow is up 33, S&P up 3. See, there's that 10-to-1 ratio. And the Russell 2000 is positive now by 2 points. I think it was negative just a few moments ago. So with all that said, let's move over to Michael and get a recap of the live training room, and then I'll be back with some headlines, our good word for the day, and we'll talk about Tesla's new music streaming service. Wow, I mean, it's one thing to be part of that select community who actually owns a Tesla, but to have your own private music streaming service, wow, that takes the whole that takes it to a whole new level, doesn't it? We'll talk more about that, and I'll tell you what it's all about. And you might want to hold off on getting your new Tesla until that's actually available. Although I'm sure while you're sleeping, it can be done through a software upgrade. Did you know that your car, as it sits in the garage, much like your computer, if you have it set up that way, it receives downloads at night while you sleep and updates itself? It's really all quite amazing, don't you think, Michael?
I do think. It is amazing. It is. It's come a long way.
It's come a long way, baby. All right, then. If you're ready, I'll hit mute, and I'll be here when you're done.
Okay, I am ready. Good afternoon, Pete. Williamson, are you watching right now? Because I want to show you the answer to your question earlier. Okay. All right. Let me get through this, and then I'll show you. Okay. All right. Good afternoon, everyone. Today is Monday, the 26th day of June, 2017. Today, in the live training room, well, first, if you have not taken a free trial with us, we've made it really simple to take the free trial. You just got to go to the home page here at CFRN.net. Watch right here. A little banner is going to drop down. Bang. Right there. To use our indicators and learn our strategy, click here. Just click there. And we've got it down to just 2 little boxes you need to fill out. We only want your first name and your email address. Do that, then you'll be sent a confirmation link, and you must click on the confirmation link. Okay, once you do that, then you will be sent all the stuff you need to get into the live training room in the morning. Today was our slowest day in 4.5 years. we had just 3 trade opportunities today. We were +1 on the euro, +3 on crude, so we got up to 36.25, $36.25. So it was a yellow day today. All right. If you're gonna look at the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. On the month right now, we're up 2,048.75. That's over 18 days, averaging 113 a day. On the year now, we're at 18,183. That's over 119 days, averaging 152 per day. Now that's one contract, 2 hours per day. Okay, one contract, 2 hours per day. Yeah, so let's look in here now. Okay, I'm going to minimize this. All right, Williamson. Right-click and go to Indicators. Now, it's either going to be in CFRN, like right in here, the CFWTZ, or it may be an imported. I don't have imported on this computer, but you may have an imported. If it's not in here, then look in your imported section, okay? And it'll be in the imported. And when you add it, you have to, it'll look like this, okay? In the email that goes out Monday mornings to all the active partners and the mentoring partners, the count and the WTZ values, okay? Copy and paste the string of values and put it in the WTZ values and make sure this count number is right. Okay, that's all you have to do. All right, so gold was horrible today. It was horrible. Look at it. It went back and forth and back and forth and back and forth, and then right here from 10:30 to 11:30, it was stuck in this little tiny range right here. And then at 11:30, the market's loosened up a little bit, and it looks like right here, 12:15, a little while ago. I mean, I wouldn't call this a trending market, so I wouldn't have traded it anyway. But it moved some anyway, did something. But we had nothing on gold today. Okay. The euro, we had just this one right here. Got one take profit on that, and we missed this one. But in the pre-market, there was some good movement in the euro. Okay, in the pre-market, there was some good movement, but I mean, look at this whole section right here. It was just awful. And since then, when the markets, when the European markets closed, there was some decent movement, but there was no trade setups in there that you could do. Okay. Crude oil. Let's go back here. Now, in the pre-market, there was some movement in the crude, and you could have traded the crude in the pre-market. But once markets finally opened up, we had to break this level right here. Then we finally did, and it went straight down. And then it came back up, and it just got real choppy. At the end of the session today, the end of the morning session, we had one opportunity right here. It was a momentum long trade. I took 3 ticks profit on that. After that, it kept going up. Okay, there were several opportunities to capture your goal for the day in this leg right here. Okay, if you didn't do it in this one, you could have done it in those. Okay. Soybeans. We were on November soybeans, so I took out the soybeans today. We had to bounce off the BBC right here, but it closed below the trend line. We ended up getting a break even on that. I was saying look for it to get down here to 12.5, and it did get down there to 12.5. We were in at 14.5, and it got down to 12.5, and it's since given another opportunity right here. There. Okay. The YM bounced around quite a bit, but I wasn't doing the YM today. I wish I would have noticed this. When the ES made a big leg down, the YM made a huge leg down too, and that was a great opportunity in there. But I had swapped my YM DOM for a soybean DOM today. And on the ES, this was that big leg down on the ES when the YM made that huge leg down. It just went straight down to the zone and then consolidated. Then went to the next zone and came back to this zone, and it's been consolidating ever since. Okay, Williamson, before I jump into the next step here, did you understand everything that I told you, and were you able to do it? Okay. You did not get the zones. Okay, I'll send them to you in just a few minutes. All right, so today we made 1 tick on the euro and 3 ticks on crude. 36 and a quarter. 3 trade opportunities today. And on the month now, we're at 2,048. That's over 18 days, averaging 113 a day. And on the year, we're at 18,183. That's over 119 days, averaging 152 per day. Okay, if you can read this, you can read all the CFTC risk disclosures down at the bottom. To take our free trial. Okay. To take our free trial, just go to the home page here at CFRN.net. And right here, you got to click there. Okay. And when you do that, when you click here, you'll be taken to this page. You got to put in your first name and your email address. Click register now. Then you'll be sent a confirmation link. You got to click the confirmation link. Okay. In the email that you had sent me, you hadn't had the CFWTZ in there, Williamson. The CFWTZ was not. If you go to view all active indicators, see it's not in here. Yours was not in there. On this one, if I go to view all active indicators, the CFWTZ is right there. Okay. All right, that's it. With that, guys, I can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking the nation's largest city park. I have got that down now. Excuse me.
You do. Williamson, you didn't get your weekly zones. Did you get your...
No, he said he has the zone.
I thought I heard you say he didn't get the zones.
He cannot see the zones. He's going to email me something. So.
Because he's on the range chart. Sometimes they don't appear on the range chart.
Yeah, if you flip it to a 5-minute chart and then go back to the range chart.
Or sometimes just, you know how to squish it up so that you're able to see more information and then spread it back out. That can do the trick as well.
And I put this little rectangle on here because a few years ago they did something with DT Pro. They did something with DT Pro that was not backward compatible. And when you resize your charts, there's some event that happens that erases all the drawing objects. Or not all of them, but it erases the zones and then it doesn't draw the zones back. Okay, I'll take a look at your email. Okay.
Did that email go to both of us?
I don't know, but I'm looking at it right now.
Okay.
And I think.
Here's my current setup. Okay. Okay. WTZ. Not sure what that 2.2 is on the very end.
Yeah, that's what I'm looking at because mine has 2 point and then line, and in the beginning I have ESU4, then the number 4, which is the count. Williamson, double click on the CFWTZ and send me a screenshot of that. Okay.
When you go to the 5-minute time frame Michael suggested, do they appear? Hey, I've got that 2.2 on the end. I'm just not sure about that.
Something is different between his and mine.
Okay.
That's what I want to see.
All right. Well, you guys will figure it out.
I think he's got something missing.
Okay.
The count.
We'll get it figured out for you there, Williamson.
Okay.
And let's see, 4 is the correct count for the S&P. Okay. So that at least that part is right. Well, he'll get it figured out for you. Absolutely. Okay. Well, now I'm forced to check something because I just saw an email. Just take me a second, guys. Okay. Alright. I got what I needed, and now we can proceed. Hey, Valerie, are you in the office? In the office.
Yeah,
You're
she
in the
said.
audience.
I asked her to email you because she typed in earlier that she wanted to meet sooner if possible. And I asked her.
Yeah, I'll call you right after the show, Valerie.
Yeah, she's not in here.
Oh.
She's not in here. But you can still call her. Right
I'll
after the
send her
show.
an email. Alright, there we go, it's done. Consider it done. Alright, so Tesla.
Wait,
Yes.
1 second. Williamson, you got to change your count to number 4. That's what's wrong right there. You have your count set to 2. It's got to be 4. Okay, right under the data section.
Now, where did that 2 come from, I wonder?
It's default. The default value is 2, unless you change it.
Oh, you've got to, okay, I see. So, yeah. Yeah, check on each chart. It will say under there, whatever the count is. So, what the Dow's, what, 5? Is that right?
I think so.
Yeah, and I think the Russell's 5. And Crude is 5. Because you count the decimal point, right?
Yes.
Yeah. Okay. Alright, so last week we talked about it. Tesla revealed it was working on a music streaming service exclusively for its vehicles. Ooh, I take that back. And presumably other environments such as smartphones. And does that mean anyone with a smartphone or only Tesla car owners with a smartphone? Let's look under the hood. The service is unnamed, but we're going to suggest Tesla Tunes over Tesla Music. Regardless of what it ends up being called and whether Musk, evidently a fan of classic rap and hip-hop, as well as certain Rolling Stones numbers, hosts his own show. It is one of the best ideas the company has had in a while. The streaming service concept follows on the heels of some questionable ideas, chief among them the 2016 acquisition of Solar City, which loaded up Tesla's balance sheet with debt and created a transportation and energy conglomerate that is now difficult to accurately value. Here's a breakdown of the brilliance of Tesla Tunes. Subscription services are lucrative. The classic problem of the auto industry is that you sell the car once and then you have to wait at least a few years before the customer returns to buy again. For decades, car companies have worked to sell owners various add-ons, such as extended service warranties, rarely a good idea. Hey, Mike, if you want to come on, go ahead. I think I just got a text from Mike Reed. Is that you, Mike?
It's me, John.
Oh, hey, John, what's up?
Are you free, or you want me to
Yeah,
come back in a
no.
while?
No, come ahead. No, you're fine.
Okay. Hi, how are you?
Good. How about yourself? Did you have a nice weekend?
Actually, not too bad. As a matter of fact, I got the machine going quite well. It's very impressive. It's very solid and smooth.
Great.
And fairly fast. It's not blindingly fast, but it's fast. So, and very, very impressive indeed. Got all the stuff in it, and so it's a great deal. Very, very appreciative of your efforts on that.
Absolutely.
Yeah, we had quite an exciting weekend. The sailing, unfortunately, was a huge disappointment. The America's Cup is one race away from going in the tank. And if the Americans don't win today, the Cup is gone. So if Santa what's about it. I can't believe that Americans have lost this deal. I mean, you know, it's just staggering because they made a lot of mistakes. You know, the sailing is, as I mentioned before on the show, personally I find it riveting. It's been very gripping. You know, the elimination, which involved 6 countries: Sweden, France, Britain, New Zealand, Japan, and the U.S. Was really pretty even. You know, pretty even throughout. You know, with the edge going to the U.S. and New Zealand, who were kind of neck and neck at the top. And since this, and you know, they eliminated all the New Zealanders eliminated all the other countries and won the right to challenge for the Cup. And they just walked away with it. I mean, this is the biggest winning margin in decades, potentially, for this Cup. It might be of all time. I mean, it's really kind of almost embarrassing for the U.S. not to be winning this and to be outsmarted by the Kiwis, you know. But it shows you that, you know, the New Zealand is a very dynamic country. It's actually attracting a lot of Americans because of the you know, great real estate down there and green country and the great scenery and everything. So it's sort of a sign of how a small nation can come up in the world and win the most important trophy of all time, the longest trophy ever. You know, the oldest sport in the world. So today's going to be a very important day. Look, if the U.S. come back and win, then if they can repeat what they did in San Francisco, where they came back from 8-1 down. Right now they were 6-1 down. So it's a different deal this time. They only have to get to 7 to win. But they were 8-1 down, and if they had lost another race last time, they would have lost the whole deal. But they won the next 9 races, or they won. They won the next 8 races to win to keep the Cup in the U.S., which is one of the most incredible comebacks of all time. If they can pull it off again, hats off to them. But they've got a big job to do that. And I was a bit shocked, to tell you the truth, that they didn't appear to change their hydrofoil. You know, more like copy what the New Zealanders are doing. They did get some boat speed on the race they won. They actually got ahead and stayed ahead. Although I must admit they slipped. You know, they got ahead right from the start. Then they got behind, and then they pulled ahead again. So they were able to beat New Zealand once. On Saturday, but the problem is they lost. I mean, the losses have been staggering. They lost by more than 2 minutes. It's like almost a mile. You know, it's a huge amount of distance. So the other disappointment was Lewis Hamilton, who, in my view, is the greatest driver of all time, and statistically has been proven to be so. You know, he was walking away with the Grand Prix in Baku, Azerbaijan, and he had some kind of a very minor issue with a kind of a seat deal, something to do with his seat, and he had to go to the pits, and so he ended up coming in 5th, which was a big disappointment. But other than that, it was a great weekend.
Well, I'm glad you enjoyed the weekend. That was, speaking of cars, we were just talking about Tesla, and Elon Musk is potentially rolling out his own proprietary streaming music service for Tesla car owners, and it will extend apparently to their smartphones.
That's an interesting idea.
Yeah, they give a whole list of reasons why. I mean, it would be, so much simpler and cheaper and one click to just partner up with Spotify or Pandora, but those options are available in a lot of cars. So it's the part of him that wants to be in control, I think. And of course, it's a way of getting money after the sale. We were just talking about the fact that, car companies, once they sell you a car, that's pretty much it for the next 2 to 4 years, 5 years, when you trade in or trade up or whatever it might be. OnStar was a business model that worked out well. And it's...
Actually, OnStar has become a very big deal.
Yeah.
It's worldwide now, and that's huge.
I don't think I've ever owned a vehicle. Actually, the van, it's not a GM product. I don't think it has OnStar. It's got the whole Wi-Fi thing going on, but it doesn't have OnStar. I've been in cars with OnStar. I always thought it was a little odd how, if they wanted to, they could listen in on your conversations without you ever knowing it.
Yeah, good point.
They're not supposed to, but if they listened in on my conversations, they would just either hear me probably yelling at the kids or telling a joke that wasn't funny, something like that. No top secrets.
Regarding the markets, actually, you must be doing pretty well today. If
well, the S&P, we had a nice run up on the S&P. Our alert last night said to consider buying 24.34. It ran all the way up to 24.47.50, which is 13.5 points. Then it came all the way back down to touch 24.34, square on the nose to the tick, and it bounced from there, and it's now bounced all the way up to 41.50. So seems to be running into some resistance in that area.
I tell you, remember the shakeout that happened on Friday?
Mm-hmm. I've got it up on the screen right here.
It was quite a shakeout. And then we actually, just for what we did, we got in last night at around 58.04, 58.03, 58.04. Rode it all the way to the highs up around 58.50 this morning, and I warned that it could be a shakeout. And next thing you know, the Nasdaq tanks to 5770. We got back in around 577.5 or so, and we just sold it a short while ago at 58.04. I would probably go back in, depending on what goes on. But today, when we get, if this rally fails, that could be a bit of a problem for the market. On the other hand, if we go higher, if we start taking out the 504, 58.04, 58.05 on the Nasdaq and get back above the 24.41 or so on the S&P, we could probably go all the way higher. So, and as a matter of fact, it's kind of looking that way right now. The FANGs got savaged this morning, and they all came back nicely, and NVIDIA got beat up pretty bad, and that came back well too. The interesting, the metals came back down and tested this morning. I think we actually have what I call a positive divergence buy signal, which is where the gold went to a lower low and the silver didn't. And when the news on the durable goods came out, minus 1.1%, the gold and silver rallied quite dramatically. Gold ran up about $10 off the lows, and silver ran about 20 cents. And because the markets were lower, as we suggested they might be, from selling them near the highs last night, The nuggets, the J Nug and the Nugget came in lower this morning. It's a bit hard to catch the low. It was very fat, and it was hard to catch the highs on the dust. But we subsequently shorted the dust and bought the nuggets, and they're going quite well right now. I would tell you this: if this J Nug gets back above 20, you can almost bet the farm on this thing and probably buy the heck out of it, because it really could be a very big deal. And if you look at Royal Gold today, it started out really heavy, really down, and it's recovered remarkably well. And so has Newmont Mining, which is really looking very good. And for what it's worth, the last time we really went on a tear, on a screamer to the upside, Newmont was really kind of leading the way. Newmont and Royal Gold were kind of leading the way. So I'm kind of pretty encouraged by what I've seen in the metal so far. And actually they're starting to accelerate higher as we speak. And the gold is just picking up, so that's go along the metals right here. We might have one more little test tomorrow because of this options expiration on the silver, but I think beyond tomorrow the metals could be on their way higher, and I hopefully will have my report out to coincide with that. I'm going to reveal something very interesting in the next 24 to 48 hours in this report, and that is, I can tell you that by a certain very reliable measure, the price of gold right now should be more than $2,300 an ounce. And when you see this reveal, you will realize that it's only a matter of time before gold goes higher to that level. As far as the rest of the market,
so you'll have that with you tomorrow?
I hope to. Yeah, I hope to get it done tonight.
Okay.
Or I definitely have. I'm pretty sure I'm going to have it out by Wednesday, but there's an awful lot of stuff to put into it, and I have to kind of get it right because this is kind of a really epic piece of work, and I want to try and coincide it with this liftoff that I foresee coming, probably this week. As far as some of the dramatic moves that we had last week, if you remember, I think I mentioned orange juice down at 100.7, 128. We just decided to go in so long there, and it's just been unbelievable. Orange juice just hit 141 a short while ago, which is just really amazing.
Now, from a historical perspective, what's the relevance of that price?
Well, I just know that orange juice is kind of a upside down. Normally orange juice goes up in winter.
Okay.
When the orange juice free, in the frost.
Mm-hmm.
And by the way, but in the summer, orange juice sometimes has these very strong rallies. When it's very hot, I guess, it tends to go up. So I think this is a pretty big deal. There's such a huge move in orange juice. I've got a feeling we're going to go higher. And coffee, which we took a stab at around 115 and 3/4, got up to 126. We sold it at 126. We bought it back at 124 just a short while ago, hoping it'll go a little bit higher. If it doesn't, we'd sell it again, because I'm not sure yet if coffee is going to go down and test this recent low. This morning, last night I took a shot of the crude oil and the products, and actually we were long natural gas from Friday, and natural gas jumped dramatically, going up yesterday, possibly because of the hot weather and the use in air conditioners and things. And so we sold natural gas.
Yeah, we're coming on what they call the big driving season, 4th of July, and
right.
Summer vacations.
Right. Yeah, and so we sold the crude and the products. We bought them back on sell-off with the market this morning, and now they're up and actually looking quite good. And this Dennis Gottman came out with an article saying that the low prices have rendered crude oil to be almost worthless. And it's not a bad idea. He's got a point in saying that, because given how hard it is to get crude out of the ground profitably, not for the Saudis but for the U.S. more like, and other places, and especially offshore. You know, look, most of these offshore companies are seriously underwater right now already. I mean, their cost of production could be anywhere from $70 to $100 a barrel, and it's the same in the Canadian oil sands, which I believe are being heavily subsidized by the Canadian government. So, and for the rest of the, you know, except in the most efficient shale area, Permian Basin, which probably is still profitable, almost every other player, this price has to be, you know, barely breaking even or maybe underwater. And the Saudis aren't doing that great either. Now, there are two reasons why the oil is probably a pretty good bet here. Well, you know, after the conversation we had with Ed the other day, who's the oil guy?
Ed Corey.
Ed, right? Yeah, with Ed. You know, where we talked about the possibility of oil rallying into the fall. I think we're setting up for that actually right now. And this new crown prince, who is just, you know, who's the new, the son who's being installed as the crown prince of Saudi Arabia, it looks like he's going to do whatever it takes to get the oil price up. Even the Iranians are talking about cuts. The Russians are, you know, definitely on board. So, you know, maybe one more round of cuts might be the differentiator and get the oil market back on track. Oh, by the way, the grains, look, we put out buys on those grains very, very low this morning. I think around 909 on the beans and somewhere like 295 on the meal. And they're just starting to take off. I would definitely be trying to buy dips just like we're doing at the moment, because there's still a chance these grains could really run amok here in a month, you know, in the next month or two. So look at the metals right now. The metal stock pulling higher. Look at Royal Gold. That's really starting to get some traction here. And the other interesting case was palladium. Once again, we sold and shorted the palladium up around 888, I think was the number last week. It crashed down to 846 this morning, and we got in around 848 or 9, somewhere like that. It was under 850, and it's currently at 863. So it's been a very wild ride. Now the market is breaking down again. Look, this was a heck of a shakeout this morning, especially in the NASDAQ. And it's very difficult for the market to come back and recover those losses, and you know, no matter how strong it was earlier today. So it's not, you know, I don't, unless some sort of a miracle happens, I don't see the markets rebounding all that dramatically later on today, later into the afternoon. That probably means we might see lower prices tomorrow. And some of these stocks are pretty shaky, you know, especially tech stocks. The semiconductors are not acting well today. The drug stocks are still acting tremendously, very, very well. They're the leaders in the market right now, and could potentially still go higher into the end of the week. By the way, I forgot to mention to you, remember we were talking about this, what do you call this other thing, the Bitcoin, Ethereum? Ethereum, is it?
Ethereum. Ethereum, yeah.
Did you hear what happened to it?
No, I did not.
Okay. It reminded me of you, because you talk about, you know, the way the market comes back to test and always gives you a second chance.
Mm-hmm.
It crashed. It literally crashed. Where was it? About $300 or something?
Are you talking about last week when they had the flash crash?
Yeah.
And the thing went to like a dime or something?
10 cents, yeah.
Yeah, in a matter of minutes. And we did take a look at that. And, you know, now when that, let's see, the day it happened, did it happen during the day session or did it happen overnight? Do you know?
I don't know.
Anyway, the article I read...
The Bitcoin is down quite a bit as well, right?
Well, the article... Well, I think because people are nervous. The article I read right after the thing happened said that the trades would not be reversed. And so that's got to make everyone holding any sizable amount of Bitcoin, I'm somewhat nervous. I mean,
Yeah.
now I don't know how much it affected people because I'm not sure exactly how it's traded. I know there's a couple of different exchanges. I know that if you were in an S&P 500 Emini Futures contract, and that happened, if you didn't have a stop in, you most certainly were wiped out. And even if you had a hard stop in, it is possible that a hard stop can be jumped in a fast-moving market. So that's why I always encourage all of those who are CFRN partners, part of the mentoring program, never keep more money in your trading account than is necessary to cover whatever level you have. If you've worked your way up to 3 contracts, okay, then you need enough for that and the ordinary, drawdowns, stop outs, etc. But I mean, if you have $50,000 and you're trading one S&P 500 contract, there's no reason in the world to have that 50 grand in that account where you're trading one S&P contract, because you're just asking for trouble. The balance of the money should go in some kind of interest-bearing, forget the interest, FDIC insured account, because should you need to move money over, you always can. And we had a guy a couple years ago who had worked very hard, and over the course of a year he had built his account up to, I think, a little over $60,000, and it was the last major flash crash that we had here in the US. He got wiped out, and he had made plans to get his money moved over. He sent me a very lengthy email, and he asked me, he says, would you please read this on the radio? He goes, I've heard you talk about it over and over, and I actually had started to get nervous, and I kept hearing you talk about it, and so I had made the plans and got the account ready that I was going to transfer it into. He goes, and the unbelievable happened. A day or two before I was going to be able to actually make the transfer, I got wiped out. And so he said, I'm sending this to you just in hopes that you will read it to your audience and that they will take what you said seriously, because it really can happen, because it happened to me. He said, I can either mope around or I can go back to work knowing that, I did it once. I have the skill set. Now I can do it again. So, and I commended him on his courage and bravery and the ability to just keep his head up when faced with such an incredible tragedy. And please, guys, don't think it can't happen to me, because it can. You could hit the lottery. In order for that to happen, of course, you would have to buy a lottery ticket. And in order for your account to get wiped out, you would have to have, or to lose all your money, you would have to have it all in one account that's not FDIC insured. So just don't do it. Don't if it's lightning, stay inside. So anyway, go ahead, John. What else do you have on this Ethereum? Is there any new news out on it? I should have Googled that.
No. I think what I was going to say was that somebody compared it with the tulip thing out of Holland.
Oh yeah, yeah.
And the Bitcoin as well. And I think the met its maker just probably on that. Sometimes that happens. When somebody kind of profiles something or just comes out with a kind of wacky comparison.
Okay, Ethereum crashed another 19% right now. How old is this news article?
Remember in 1994, the Mexican market, Telefonis de Mexico, was like AT&T. It was the most heavily invested stock.
Matching the market. Good.
And everybody was long Mexico up to their eyeballs, and and there was a tremendous there was about 800 funds in Telmex, Telmex of Mexico, and somebody came on CNBC and said, the boat looks a bit, there's a lot of people on one side of the boat kind of thing. And next thing you know, you saw, actually it was like a precursor to what happened in 2007. And the market just unraveled, and it went just south for like a whole year or more before it bottomed. And it ultimately bottomed when they divided the peso by 4 in virtually 1 or 2 days. So these things can happen, especially with these overseas. Look what happened in Brazil. Just wiped out all the year's gains in one day just a few weeks ago, back in May. So I remember thinking to myself, boy, if what happened in Mexico ever happened in the U.S., we're really going to be in trouble, because Mexico had the U.S. to bail it out when it happened. There was no who was going to bail out. I remember thinking to myself, who's going to bail out the U.S.? Well, the Fed bailed us out in the end, thank God. But certainly, we've had a once in a generation crash in that kind of area.
Here is, I know you can't see it, but for the rest of the audience, here's an Ethereum 5-minute chart for today. Now, the accompanying news article that came out an hour ago says Bitcoin rival Ethereum plunged Monday despite a major exchange's efforts to shore up confidence by announcing a credit for customers who lost money during last week's flash crash. This is amazing. They were very adamant last week in the article that the trades would not be reversed, and now today, in an attempt to restore investor confidence, traders' confidence, they are going to reverse those trades. Ethereum, also known as Ether, traded 19% lower today, down near 245. Last Wednesday, Ethereum briefly plunged in a flash crash from above $300 to just 10 cents on Coinbase's GDAX exchange. On Friday, the exchange... Okay, so this news came out Friday. On Friday, the exchange said it would credit customers who experienced a margin call or stop-loss order on GDAX during the flash crash. Now, I'm curious if they're going to make people whole who did not have in a stop-loss. It says they're going to credit customers who experienced a margin call or stop-loss order. I mean, because the guys who didn't have a stop in, if your stop got jumped because of a fast-moving market, reversing it, make them whole, that seems like the right thing to do. Well, I don't know. Let's see, Ethereum is still up about 5% for June and 2,500% for the year. At its peak, Ethereum had surged more than 4,000% for the year. In a blog post on Monday today, digital currency investor and Union Square Ventures partner Fred Wilson said the decline in Ethereum was profit-taking after a massive run higher in the last 6 months. My gut says we're headed for a sell-off in the crypto sector, but he said he remains optimistic about the future of cryptocurrencies over the next 5 to 10 years. Last week, high demand for Ethereum-based projects also clogged the network. The inability of Ethereum to handle the orders raised worries that digital currency may soon face a debate over an upgrade model similar to a heated controversy over Bitcoin's future that has weighed on that currency. There's 2 different methods they're considering for upgrading Bitcoin, set to go into effect July 21st and August 1st, respectively. Initially, the systems were incompatible, threatening to split Bitcoin in two and likely reducing its value. However, a developer announced earlier this month a way to make the two methods compatible, helping Bitcoin recover from lows of the month. Bitcoin traded nearly 5% lower Monday, around $2,479, still up 6% for the month and 156% higher for the year. Now, you talk about the tulip craze. We see, something that falls from $300 to 10 cents. I would think, obviously, there is irrational exuberance here, because it seems as though most rational people would have, as soon as that thing bounced back to 300, because the whole thing only lasted a few minutes. As soon as it bounced back, if I had money in there, I would have probably headed for the exit. So, yeah, now, if a person only has, a small percentage of their portfolio in it, 5%, 10%, then I guess no big deal. But if you've bet the farm on this thing, I don't know. I mean, that's pretty dramatic, $300 to 10 cents. Now, the fact that the exchange just says they're going to make people whole, I mean, that's confidence, but that came after the fact. That came after them saying the trades would not be reversed. So, anyway, what are your thoughts? Do you think this is going to become the new standard? Are we going to see fiat currencies fall away?
After this, look, it could. If it survives this, what just happened, that could definitely give it some, credibility for becoming something bigger than it is already. Oh, by the way, listen, I just wanted to tell you, there appears to be a developing bottom in the grains that I would describe as.
Now, did you roll forward to November?
Yeah, I just put it in, and it looks just as good. It's a fairly high quality bottom, and we're not there yet. And actually, the wheat is not confirming it. So, I would think that we've got to really watch the grains like a hawk here in the next couple of days, because if we do come out from under this bottom and have a decent move up, the bottom is probably in on the grains. On the beans, at least, anyway. Possibly on the whole grain. The funny thing is, actually, we were in the oats. The oats got clocked last week, and we took a shot at the oats, and it ran up to 264 today, and I think we sold it at 263, and even the oats is crashing now back down again, which is not a good sign. The cotton, by the way, also, cotton got absolutely massacred this morning, down again from last week's high. And it didn't look like it was going to rally, but we took a shot at it anyway, around about the 66.30 level, and it's currently at 67.05. So we managed to do quite well on some of these. It's been really an incredible market here the last few days.
Well, on Friday, we were watching gold into the close Friday afternoon, and we put out a swing trade on the Twitter account, and it looked as good as I could ever see it look, but for whatever reason I still had some hesitancy. And so we only risked, the stop loss I published was just $2. It was sort of like, I guess, at that point it was a fishing expedition to see if, in fact, we were on the right side of the market. And then, last night or today we might have suggested adding to that. But the $2, it ran, I think the entry was 12.58, and it did run up, I believe, to 12.60. I think that was a swing high. Did it make it to 12.60? No, I think it only made it to 12.58.90. And my original entry was going to be 62, and then I thought about it, and I thought about, and right there, that's a warning sign. When you see a trade and then you start rethinking it, that in and of itself is sort of a red flag, or at least a caution flag, because you're starting to overthink the thing. If I'd stayed with 62, we'd have been fine, but I didn't. I said, 58, but we're going to only risk $2, which for a trader, per contract, that's $200. So, $200 per contract, not a big issue. But not only did it not, I thought perhaps it would come back, take out our $2 stop, and then continue higher. But it has done absolutely the opposite. This thing put in a low all the way down at 1236.50. So to say that I did not see this coming, I did not see it coming. And I was using a daily chart, and I'm going to show you guys what I was looking at. I know you won't be able to see it there, John, but I'll show you guys how this thing turned. Okay, this was Friday afternoon, this green candle. Okay, this was the third green candle in a row. This area here that had the potential to be, wrong drawing card. Let me get the little rectangle. Okay. This area here, which had the potential to be good resistance, we had actually moved above that, and I thought, okay, this is the beginning. And then I had marked off some targets on the way up, even going so far to say that after 3 targets, we then run into a double top at 1300. If we're able to break that double top and hold it on a pullback, then I saw 1319 as a possibility. If and when we trade back above, in fact, that's just kind of going to be carved in stone for the swing traders, because there's nothing that can happen down here. This thing can do all kind of back flops and flip around, whatever it wants to do, jump through hoops. If we come back up through 1262, if you don't have to hear me say it then, just know that I consider 1262 to be a good entry point long. Now, after the damage that's been done today, I don't know that that's going to be an opportunity that presents itself anytime soon. What do you think, John?
Well, I tend to agree with you. The one thing I wanted to say is look at the gold now. They're really doing very, very well. We got the golds. The stocks are going up ahead of the gold and silver, so it's probably paving the way for some kind of final low in the silver. And it doesn't have to be a lower low; it could be a higher low tomorrow. And then beyond tomorrow, there could be little to stop the silver going higher, and that could really stop the gold. On the stocks, we've got a bit of a kind of a impasse going on here right now, where we've come down a little bit in the last few minutes while you've been talking, but we're trying to hold in here. If we hold and work our way high, I would say maybe the worst is over on this little sell-off that we just had. But if we turn lower this afternoon, that would definitely be a bit of a problem for the market. On the encouraging side, the mid cap is outperforming the market today. It's one of the better performing indices, and so that I would take quite a bit of comfort in that. in terms of, in fact, you see the way we're starting to turn up here now. It's starting to look better again. So, yeah, I think we just might have made the lows right here a second ago.
Okay, now last night on gold, when we sent out the nightly alerts on gold, we were looking to sell 1255. That is a trade that, you know, went exceedingly well, simply because gold did the exact opposite of what we had thought it was going to do Friday afternoon. So sell 1255. And so those who got that email last night, congratulations. I'm sure you got something out of it. We dropped from 55 to 36.50. So that's about an $1,800 per contract move.
That's very good. That's fantastic.
Yeah, $1,800 plus. I think it's $1,800 plus per contract available. So anyway, it's it is what it is, and that's why, guys, you always, I don't care how certain and convinced you are about any particular trade, of your 9 indicators and oscillators, 11 of them may be pointing north. Okay, so if you're that convinced it's going higher, then that much more the reason to put in a physical hard stop. And not only did we suggest a hard stop, as we always do, but we suggested a small hard stop because we did. So leave it at that. So that's the story of gold.
Yeah, by the way,
go ahead.
Yeah, I wanted to mention something kind of interesting here. You know this Whole Foods takeover deal?
By Amazon, right?
Yeah. I actually believe there's another bid coming. That's my idea.
Did I hear Kroger's name thrown about? Did you? Is that what you heard?
Well, look, you know, this is one of these kind of no-brainers. You know, I'll never forget this. At the start of the new millennium, 2000, the drug. If you remember, the drug stocks were going crazy back then, and there was a drug stock that we recommended, and it was some sort of a cancer stock, and I think it was about $4, or maybe it was about $4, and it suddenly went to $8, and I was saying, you know, you got to buy it. And I actually made the statement at the time that, you know, because there was a lot of small cancer stocks. This was sort of the beginning of the, you know, the DNA and all the breakthroughs, and the beginning of the cancer breakthroughs and things. So a lot of these stocks went crazy right at the beginning of the new millennium. And I remember saying to myself, if I was the CEO of Merck, you know, I'd probably take a stake in all 10 of these top little drug stocks, because if one of them works out, it's a home run, you know. Well, guess what happened? Stock that we recommended, it went to $132 a share.
Wow.
So, you know, all of the stocks went crazy, you know, and the big upturn when it took Yahoo and everybody else up. And of course, then they all went down. But I would say right now that if you're running, you know, for example, Carrefour, which is one of the biggest supermarket chains in the world, it's like the Walmart of Europe, with huge exposure in Brazil and Latin America. It's a French company. It's a French hypermart. Or if you're the CEO of a big German hypermart, I mean, if you want to get a footprint in the U.S. overnight in one fell swoop, in a high-quality merchandiser like Whole Foods, to me, it's an absolute no-brainer. No matter how, look, how can you lose? You almost can't lose here. You're in the battle with the second richest guy in the world. If you come in and buy Whole Foods right now at $43 a share, or you know, you probably have to bid 45 or 50, who do you think is going to take it off your hands? Bezos ain't going to give up on it. He's going to pay us 60 for it. So, you know, this could become an epic battle here. So My recommendation today is just above the market. It might go down a little bit more, but at some point, if you start to see an upturn in this Whole Foods, WFM, you may have a risk-free trade on your hands. Now, nothing is risk-free, but this could be risk-free, unless Bezos is going to give up on this deal. That's the only risk in this deal right now. So, there's little likelihood of that happening just from saving faith. So, this is I would, and these bids could come right out of the blue. Could hit this thing. And the reason I'm saying that is several years ago. Look, this is I don't think I've ever told this story on the radio before, but back in 2009, on March the 6th, it was actually March the 6th when they called me and asked me. A very, very wealthy family, who's quite extremely, it was almost a household name type family today, called me, and they had a very big position worth about $800 million in a company that had fallen from about $40 a share. So it had fallen from being a multi-billion-dollar holding to this family to where it was like $800 million. And they were freaking out. I mean, they were really, they were at the end of their tether because the stock was at $7.
Right.
And they were saying, should I sell? And I looked at the stock, and what gave me confidence was that the sort of run from maybe 14 down to 7 was a very, very defined trend line. It wasn't kind of a spike. It was just a very measured and defined trend line that looked to me like it was just about to break to the upside. So since I was calling the lows myself on the market, I basically said, whatever you do, don't sell. I said, so please, don't sell, because usually when people call you and they're in a panic, they're doing the wrong thing.
Yeah.
So the 9 times out of 10, and so this stock actually turned, and before you knew it, it was back in the teens, and then it was in the 20s, and then something really weird happened around about 24 or so, or 24 bucks. They spun off a part of the company where these guys collected about $15 a share off the spin-off, right?
Yeah.
And the regular company stayed, still stayed in the 20s because I guess the spin-off was worth so much that it kept the price up of the company. And then right out of the blue, I think it traded in the high 20s, and then one day, right out of the blue, came a takeover bid at $32 a share, right? And then it stayed there for a day or two. Next thing you know, it got a second bid at 38. Stayed there for a day or two. Then it got a bid at like 44. Then it got another bid at 54 or 52 or somewhere like that. And then the final bid was 64, and that's where it went. That's where it sold. Is that an amazing story or what?
Wow.
And obviously, the family that owns it,
yeah.
So,
they are. I'm sure they feel forever in your debt.
Well, they did, and they did a lot of good things for me, so I have a lot to be grateful for. It is an incredible story, and I kind of feel the same way about Whole Foods, because Whole Food isn't just another Kmart or something. It's something special. It's something pretty. It's really unique. It's a unique company, and listen.
If Bezos gets his deal, I think the way the article read was that Whole Foods share price has increased so much on the news that Bezos is basically getting it for free.
Well, exactly, and that's why it's almost a strategic play for. Look,
he had no way of knowing that was going to happen. He just he's one of these guys, man. He steps in poo-poo and comes out smelling like a rose.
Exactly, but at the moment, I wouldn't call this the mother of all home runs in terms of that you hold this thing forever. Although if it's properly managed and it's done, and if it merges with the right partner, it's going to be a huge winner no matter what. Look, they got a lot of very strategic. It's kind of like Sears. Sears may be a dog at the moment, but it's got a lot of valuable real estate that at some point in the future could become very valuable. This Whole Foods is very well located throughout the U.S., and it has a great business.
Yeah, the Whole Foods. I read a thing about all your big chains, Starbucks and Jamba Juice and McDonald's and Burger King. They all do a pretty in-depth analytical study of the neighborhood and the area and the traffic flow and car count, pedestrian count. They have all this, but supposedly Bezos has a algorithm that just beats the pants off everybody else's when it comes to picking a retail location, even although he doesn't have or has very few retail stores. But Whole Foods themselves have a very unique way of going in and doing their study and
exactly.
making sure that those stores go in the right spot, because the difference between success and failure of a retail location could be 2 or 3 blocks.
Right. But I'm not sure I mentioned this to you before, Dwayne, but remember that French guy was staying in the Sofitel in New York, or one of those French hotels in New York, and he had that scandal with the maid and all that. He was the head of the IMF.
Right. Yeah, I remember.
Okay, my cousin was actually the manager of that hotel. He was actually the head,
really?
Head of U.S. operations. He was the head of U.S. operations for that entire chain, and he basically did the sort of thing like Whole Foods, like going out and he scoped out all the sites for all those hotels for that chain in the U.S. And actually, before that, he worked for Trust Houses Fort, which he originally was. Remember our connections down in Africa. With my parents and everything, having lived in Kenya and other parts of Africa, and he went to Kenya, because his grandfather was there just like me, and was working in a hotel in Kenya for Trust Houses Fort. Some American guy came in, saw his potential, offered him a job in New York. He took the job. Next thing you know, he's got an office at the top of the Pier Hotel in New York, which was owned by Trust Houses Fort. And then next thing you know, he got headhunted. And you think he was sitting at the top of the world, right?
Right.
It's not like being, this guy who had the 60 grand. Just when you think everything's fantastic, something can come along and ruin your day.
Right.
So he got headhunted by Accor Hotels, which is the French hotel conglomerate, and he decided to go with them. And you're not going to believe it. 6 months later, his entire job area and everything was gone from the top of the pier. So that was a lucky stroke in life for him that he took that deal. And I would say to anybody, if you ever get headhunted, take the deal, because if somebody wants you that bad, you should go for it, because no matter how secure you are in your current job, if somebody is willing to pay a premium and give you the right benefits and everything, I would definitely go take that deal any day forward. But anyhow, he did for Accor and they did Motel 6 and all that. They owned all those. I think he was involved in the buyout of that. So the point, that's why I'm really kind of mesmerized by this Whole Foods deal, because it is a strategic gem, and it is. Look, Whole Foods is a bet on the future prosperity of the U.S., future growth and prosperity. So, if you're the head of Walmart, or why? I mean, I can't believe Walmart hasn't bid for this. There was an article. What got me thinking about this? There was an article that came out on Friday saying that Walmart's not interested in bidding for Whole Foods. I mean, I can't believe either they're leaking that deliberately, and maybe ready to pounce. But I cannot believe that a company like Walmart, with Sam's and all these other incredible things that they've done, and the biggest and richest store in the world, effectively, except for Bezos, isn't in the running for this target. I mean, for this gem, because it is really it's kind of a no-brainer for Walmart. They're going to lose a ton of business.
Maybe it makes more sense for them to beef up the organic section in their existing stores.
Well,
I don't know. I haven't heard anything about them, but
well, it's, you know what makes me feel, you know, that Whole Foods is so valuable is it's a turnkey operation. It's already running.
Yeah.
You don't have to pay in it. You know, you pay for the deal, but it's
right.
it's an ongoing running operation.
Everything's in place.
Where,
right.
you know, Walmart's going to have to spend billions to
Uh-huh.
do anything to compete. So when you factor all those things into it, and just, you know, at the end of the day, increasing the market share. How do you increase? This is a way to increase market share and also increase, you know, your to reach a different type of customer. You know, a higher grade customer, a higher paying customer. So that's why I think this is such an exciting situation. That I don't think the story is being written on this one yet. So and it could become a personal winner for you if what I'm saying works out. There's no way that we can tell whether it is or not. But the point is, if you buy the stock at like $42.50, and it gets taken off, I don't know exactly what the actual price is, but how much, you know, assuming there's virtually no risk in this deal, because it's pretty much done deal already. You've got a potential risk-free trade here. You know, if suddenly a bid comes in and the stock jumps to $10 or $20, that's what I'm trying to get across right now.
Yeah, I mean, he's basically.
How do you know one of these hedge funds is putting together a deal to buy them out? Because look, if the hedge fund puts together a $50 bid for Whole Foods, and eventually Bezos pays $60 for it, how can they? That's a great deal. You know, they could make $10 a share, or possibly several $1 billion, maybe up to $10 billion on this deal. You know, for a month's work or something. It seems to me that there's something. You know, I'd be very surprised if something like that doesn't happen.
Does he face any regulatory hurdles? I don't think. I mean, he doesn't own any other grocery stores, so there's no monopoly.
Exactly. No. I think it's pretty clean. Clean deal.
I don't see anything that would hold him back. And he's already talking about how many jobs will get slashed at Whole Foods, and I think that's because he plans to implement this new shopping model that he introduced last year, where I'm sure you saw the video where people go in to the store. You swipe something when you walk in, or it does a face scan. Yeah. But it knows you're a Prime member, and you go in. And
there's a lot of risk for all the. That's why the real retailers' stock went down as soon as this deal was announced. I mean, there was billions wiped off their value. So, you know, that says. I mean, in a way, if Walmart came in and bought it, their stock price might actually go higher. They might end up getting the deal for free. You know, but the point. Look, it's almost. In a way, buying Whole Foods here really gets you exposure to sort of exposure to Amazon in a way, but because if Amazon goes up higher in the next month or two, as I believe it probably will, you know, it could also reflect on the stock to some extent, but. I don't think the story's over yet. I think, and if there is a bidding war for Whole Foods, it could actually set off the next uptrend. You know, I think sometime this week or going into the end of the month and into July, there's some sort of catalyst coming. Maybe it's the employment or something else that's going to start the next rally in this story. There was an article in CNBC over the weekend where a guy had a picture of this chart on the S&P that looks like it's going to break out to the upside, and it does look very bullish. You know, it looks like the S&P could run up to about 2475 from here, and it possibly could get to 2500. You know, over the next month or two. So I think that looks highly likely at the moment.
Well, this bull's been running for a long time.
Yeah, thanks very much for the invite, Dwayne, and we look forward to catching up with you tomorrow.
Absolutely, John. Have a great afternoon. We'll talk to you tomorrow.
You too. All the best.
All right.
Bye.
Bye-bye.
All right.
Okay. So, bonds, 156.26, and ran up 14 ticks at 31.25 per tick. Great day for bonds. Doesn't change the fact that I certainly think that those who are just learning how to trade, you should be very, very wary of the bonds. And even those of you with trading experience, unless you're just a natural fit with bonds, there's so many other markets available that, but again, you know, some people are just bond traders through and through. Been trading them forever and have no plans to stop. Let's see. Tom asks a question. Can you use an option, say a far out of the money put, to act as insurance against a flash crash? You know, Tom, that question makes great sense. And I'll tell you who can give you a great answer. Call Bert at 866-928-3310. Let him know you asked the question on the show and that I deferred to him and his expertise on bonds, because he really knows options. He really knows options inside and out. And if you are considering such a strategy, he would be the guy who not only is he licensed, but he's just well versed in options. He's been trading them for years. And he could help you navigate those waters. I think you have a good idea. Let him kind of flesh it out for you. Okay, 866-928-3310. Frederick said that the Supreme Court just upheld President Trump's immigration ban from the 7 Muslim countries. I had not heard that. You're welcome, Tom. No, Frederick, I had not. I don't know if that's breaking news or not. Let me just go Supreme Court and hit the news tab. Well, 3 hours ago, the last headline says Supreme Court will hear travel ban case. That came out 3 hours ago. Is there something more? That may be breaking news. Supreme Court announced on Monday that it would hear, or that it would decide whether President Trump's revised travel ban was lawful, setting the stage for a major decision on the scope of presidential power. Mr. Trump's revised executive order issued in March limited travel from 6 mostly Muslim countries for 90 days and suspended the nation's refugee program for 120 days. The time was needed, the order said, to address gaps in the government's screening and vetting procedures. 2 federal appeals courts have blocked critical parts of the order. The administration has asked that the lower court ruling be stayed while the case moved forward. The court granted part of that request in its unsigned opinion. The justices, in effect, said that foreigners with ties or relationships in the U.S. would not be prohibited from entering the country, but those applying for visas who had never been here or had no family, business, or other ties could be prohibited. Yes, breaking news right here on CFRN. Thank you so much for that, Fred. Appreciate it very much, Frederick. Okay. All right, guys. We got to scoot along here. We still got some ground to cover. Good word for the day. again. Come on, notes. There we go. Now we're cooking. Look at the BBC RER travel ban. Okay. Yeah, it's interesting how sometimes they have the news before we do. I'm just going to bbc.com. Is that what you're referring to, Tom? Okay. On the BBC site, I have Trump travel ban injunction partly lifted. Okay. Let's. U.S. President Donald Trump has welcomed a Supreme Court ruling allowing his travel ban to be partly reinstated as a victory for our national security. Okay. So, yep. You heard it here. America's highest court also granted a White House request allowing part of its refugee ban to go into effect. The justices said they would consider in October whether the president's policy should be upheld or struck down. Mr. Trump seeks to place a 90-day ban on people from 6 mainly Muslim nations and a 120-day ban on refugees. The president welcomed the ruling's qualified authorization to bar visitors from Iran, Libya, Somalia, Sudan, Syria, and Yemen, which he describes as terror-prone countries. As president, I cannot allow people into our country who want to do us harm, he added. Mr. Trump has already said the ban would take effect within 72 hours of court approval. What does the ruling say? The Supreme Court said in Monday's decision, in practical terms, this means that the executive order may not be enforced against foreign nationals who have a credible claim of a bona fide relationship with a person or entity in the U.S. All other foreign nationals are subject to the provisions of the executive order. The ruling also said it would permit a 120-day ban on all refugees entering the U.S. to go into effect, allowing the government to bar entry to refugee claimants who do not have any bona fide relationship with an American individual or entity. And so, even the BBC is calling this a Trump win. Now, of course, they're going to start splitting hairs. Well, what does bona fide really mean? The ruling clarifies that those who would be deemed to have such a relationship would include a foreign national who wishes to enter the U.S. to live with or visit a family member, a student at an American university, an employee of a U.S. company, or a lecturer invited to address an American audience. Where's the weakest link in that chain? Although I think they could all be utilized. For example, a nonprofit group devoted to immigration issues may not contact foreign nationals from the designated countries, add them to client lists, and then secure their entry by claiming injury from their exclusion. Were there any divisions on the court? Yes. 3 of the court's conservative justices, Clarence Thomas, Samuel Alito, and Neil Gorsuch, wrote that they would have allowed the travel ban to go into full effect. Justice Thomas said the government's interest in preserving national security outweighs any hardship to people denied entry into the country. Mr. Trump restored a 5-4 conservative majority to the Supreme Court when his nominee, Justice Gorsuch, joined its bench in April. There are 5 Republican appointees on the court and 4 Democrats. The original ban, released on January 27th, provoked mass protests at American airports. It included Iraq among nations whose travelers would be barred from the U.S. and imposed a full ban on refugees from Syria. The President issued a revised version with a narrower scope on the 6th of March to overcome some of the legal problems, but Mr. Trump was unhappy about having to do so, calling it a watered-down, politically correct version of the first one. Well, you know, man, I'm glad to see the guy get a win in his column. I mean, he's been fighting his own party to try to move the agenda forward, which is to, restore America to the country that we all want it to be. Okay, we don't want to be the bully. We've sort of been forced into being the nation's policeman, if you will. You know what? Before I get too far sidetracked, let me get back on point. But I will throw in this funny thing happened on the way to the kitchen the other day. I passed through the living room, and it dawned on me that, oh, that new TV package you got, you have HBO now and Showtime. Yeah, I knew that. So I just clicked on HBO for a moment, and I saw there was a program called Homeland. And I go, actually my wife said, oh, well, that looks interesting. I think she watched West Wing, and there's been a number of those political, presidential, fictional programs that have become quite popular of late that she has watched. And so I don't know if any of you have ever seen Homeland. I think on HBO, I think they're in the 6th season, perhaps. I could be way off, but I know we got to do a whole lot of scrolling down to get to where we are now in season 2. But if that show doesn't send shivers down your spine, I just don't know what would. Interestingly, the television program from Showtime that I've been talking to you guys about, Billions, which it's basically the life story of fictional character Bobby Axelrod, who is the founder of the equally fictional Axe Capital, a hedge fund in Connecticut, and he is a billionaire, and he plays that role quite well. I wasn't familiar with him as an actor, I don't think, prior to seeing Billions. Billions only has two seasons, so we scurried through those episodes rather quickly. And then when we clicked on this show the other night, Homeland, well, oops, there he is. Same guy. And I'm not going to spoil the program for those who haven't seen it and want to see it, but you'll find this out, I think, in the opening credits probably of season 1, episode 1, and you have to go to season 1, episode 1. Otherwise, the writer and the producer and the director have completely wasted their time with the building and blending of the characters and personalities. A U.S. Marine was captured and held prisoner in Iraq for 8 years. And then during a attack on a compound, he was suddenly discovered, locked up in a room, long hair and a beard. Supposedly been there for the past 8 years. And I'm going to leave it there because there's so many twists and turns, not only with the plot, but with the personalities, but with and I understand it's a fictional story. I understand that. But in just the first season and a half, I've come away with a much more robust, if you will, understanding of global politics, the effort it takes to keep our country safe and secure, the very real threat that exists to our national security. I mean, my son is 15 years old. He's in the junior ROTC. He might very well, when he graduates high school, enter the military. He doesn't remember 9/11 because he hadn't been born yet. I say that for the reason that we have a entire generation of children, boys and girls, and whether they enter the military or not, they were not standing in front of their TVs on that cool, crisp September morn. I think it was a Tuesday, if I recall correctly, and they didn't live through that. They grew up hearing that Osama bin Laden was a really bad man, and I guess that they thought once he was taken care of, then that would be like the end of it. But you cut off the head of a snake and 10 more pop up. So I gotta warn you, they dropped the F-bomb on that show like it's taking a breath of air. I mean, I don't understand why Hollywood, well, I guess I answered my own question, why it is so necessary. I mean, could that story have been told and been every bit as dramatic and realistic without one F-bomb or one GD? Well, in my opinion, yes. But obviously, in the opinion of, those who produce these programs and fund these programs, it's required. So, and I know probably, I don't know what percent, some percent of the world speaks that language. I spoke that language until I was 35, 37, whatever it was, and then suddenly I didn't, because my life went in a different direction. And it wasn't like I had to train myself or rein myself in, or it just stopped when I had a change of heart, a heart change, if you will. That just went with it. It was gone. In fact, not only was it gone from my lips, but when my ears would hear it, I'll never forget. It was when it dawned on me that this had transpired in my life. I was at the office downtown, and some gentleman had come to see me about a job, and he caught me in the stairwell, and he was telling me his story and why he needed a job, and because we only gave jobs to the truly down and out, and so he was, he had to give me a story so he could get a job. And as he was unleashing this foul language, I would back down a step. There was this force behind his words, mixed in with his, I don't know how to explain it really, and as I would back down a step, he would step down, and it was like until he had to be practically pinned in the corner, and he doesn't have any idea. He's totally clueless that I am missing, 90% of his story because I'm just offended by the language. It just sounds so vulgar. But yet, 2 weeks ago, I would have been on the other side of that conversation potentially. So anyway, that's the world. Okay? We live in this world, but we don't have to be like the world. I guess that's the good news. But when there's a change, you'll know there's a change. Because things that were okay before, things that didn't bother you before, suddenly doesn't mean you become holier than thou, doesn't mean that you suddenly become judgmental, and not at all. You're just a different person. You hear with God's ears, you see with his eyes, you feel with his hands. And I don't know. Anyway, long story, huh? Okay. We were headed for the good word for the day. Yeah, let's do that. I think that would be mo better than me rambling on about cursing. So, the reason I was giving you all of that was just simply that, heads up, there's a lot of foul language. Not only is there a lot of foul language, there is gratuitous sex scenes. So I know that many of you are probably rightfully judging me, going, well, Dwayne, based on what you just said, I don't think you ought to be watching that show. You know what? You're probably right. And why don't I just leave it at that? You're probably right. And so now you're saying, well, are you going to do something about it? Honestly, I always tell you I'd be honest with you. Yeah, I've always said you may not like what you hear, but I'll tell you the truth. I don't know. This isn't mindless entertainment, okay? Yes, it's a fictional story, but I have learned so much about our country, our nation's security, the political machine that's behind it all. So to say that I have not gained something. Now, of course, again, fictional story, but everything that I'm talking about as far as bringing in new information, I can vet that on the internet, right? Because if it's on the internet, it has to be true. It might not. It might be, full of baloney on the TV, but man, if it's on the internet, it's the real deal. You get my point. I think. I hope. If not, the cards and letters will come. So, send them on. Let me get at the good word for the day so we can get out of here. All right. To thine own self be true. That sounds pretty good for what I was just talking about. Proverbs 21:6. It's easier to maintain your integrity than it is to regain your integrity. It may cost you to do the right thing, but it will cost you even more to abandon your principles. Like a bird hatching an egg it did not lay, so are people who get rich by cheating. When their lives are half finished, they will lose their riches. At the end, it will be clear they were fools. Jeremiah 17:11. In 1994, Davis Love called a one-stroke penalty on himself during the second round of the Western Open. He moved his marker out of the path of another player's putting line. Then later, he could not remember if he'd moved his ball back to its original spot. Since he wasn't certain, he gave himself an extra stroke. And yes, you guessed it, that one stroke caused him to be eliminated from the tournament. At year's end, Love was $590 short in winnings to automatically qualify for the Masters. And he needed to win a tournament to get into one of golf's most coveted events, the Masters. I grew up in Augusta, Georgia, or a little town outside of it. So when the Masters tournament is held each year in Augusta, it's a big deal, let me tell you. Some people rent out their house. That's half their annual salary or half their annual income, because they'll rent it out like a week before and the week of and the week after. Basically, they rent it out for a month to somebody, and they might get 25 grand. Yeah, true story. Anyway, that's not my point here. Fortunately, the story ends well. The week before the big event, he qualified by winning a tournament in New Orleans and went on to earn $237,600 by finishing second in the 1995 Masters. Later, when asked how he'd have felt if he'd missed the Masters because of calling a penalty on himself, Love replied, "The question is how I'd have felt if I'd won and spent the rest of my life wondering if I had cheated." In the words of Shakespeare, "To thine own self be true, and it must follow as the night the day. Thou canst not then be false to any man." Proverbs, one more time, 21:6. A fortune made by a lying tongue is a fleeting vapor. That, my friends, is our good word for the day. Now, as we were talking to John, I managed to get through most of the alerts. Just want to take a look at this real quick. Amazon has applied to patent a beehive-like tower for delivery drones. Strange science fiction design shows a multi-level tower, and the structure is intended for densely populated areas like cities. So this would be a tower that is in essence a docking station. Do we have a picture? Well, what we have really is a patent, but I'll share it with you. Okay, here's the drone that we've heard so much about that's going to deliver your packages. Okay, there's the beehive-like structure. And so all the little drones, they come into the port and then they get loaded up with another package and they're sent on their way. This is the actual diagram submitted to the patent office. The drawings and the patent filing look like they've been plucked straight out of a scene from a science fiction movie. It's likely that the tower would be particularly useful to Amazon in densely populated areas such as Manhattan, London, and Tokyo. However, several regulatory hurdles would have to be overcome before Amazon could start building the towers, should it decide to push ahead with the idea for them. Now, when they talk about densely populated areas, they mention Tokyo. I was in Tokyo in the late 70s. In the U.S. Navy, and that was some of the, or it was the most expensive real estate at the time on planet Earth. And crowded doesn't even begin to... Have you ever been in New York City and rode a subway during rush hour? Yeah? Okay. That's like walking down a street in Tokyo at 3 a.m. in the morning. That's how crowded it is. And people live in these little tiny apartments. Now, I know that the Japanese people are slight of stature, but I mean, whole families live in what many Americans have for a walk-in closet. And I'm not speaking of poor people. I'm speaking of people who are middle class, maybe even above. There just isn't enough space to go around. You know, when you drive through the Arizona desert and the Nevada desert, and you think about this concern that people have voiced for many years about overpopulation. Oh, what are we going to do? You know, we're running out of space. I mean, you could drive for hours and hours and hours and hours, and you don't see a building, you don't see a human being, you don't even see a cow. You might see an occasional rock. I mean, but then go to Tokyo. All right. Enough of that. Enough of that. Enough of that. Microsoft suffered a massive code leak after Windows 10 source code was posted online anonymously. Microsoft confirmed the leak, which included confidential Windows 10 builds that hackers could have used to look for security flaws, according to the Register. A former Tesla engineer has launched an FDA-approved company that makes hangover cures. Sison Lee will launch Morning Recovery on July 5th, selling drinks containing Asian herbs that he says helps the body get rid of toxic acid buildup after a night of drinking. Google will no longer scan your Gmail inbox in order to work out how to target you with advertising. Gmail previously scanned for keywords to inform inbox ads, and Google didn't explain why it was ditching the practice. Interesting. Mac malware is surging, according to analysis from security firm McAfee. The number of cases of malware targeting Macs was up 53% in the first quarter. Now, we were raised up in this internet generation being told that the Mac, Apple products in general, were impervious to viruses and malware and bad stuff. Apparently, that has changed. Child safety experts are worried that a new feature from Snapchat, which lets you track your friends nearby, remember we talked about the company they bought the other day, could lead to online bullying or harassment. The safety group ChildNet International said people should not give their location away on Snapchat to people they don't know. I question if you should give away your location to, I mean, do you want everybody to know where you are every minute of the day? I mean, if they need to talk to you, they can call you or they can text you. But do you really want them stalking you and sneaking up behind you? Boo, you know. You're just trying to get a cup of coffee or have some lunch or maybe sit in the park on a bench and contemplate whatever. I mean, I don't know. Facebook wants to produce high-quality scripted TV shows costing up to $3 million an episode. The company is in talks with various Hollywood production firms for shows like Freeform's Pretty Little Liars. I've never watched that, according to the Wall Street Journal, and is also looking for shorter 10-minute unscripted content, which I guess would be something along the lines of getting coffee with comedians in cars. I think that's Jerry whatchamacallit's show. Apple CEO Tim Cook, Amazon CEO Jeff Bezos, and Google CEO Sundar Pichai were among 21 CEOs to meet with Indian Prime Minister Narendra Modi in the U.S. this weekend. Modi gathered the leaders in a roundtable to pitch his government's tax reforms ahead of a meeting with his U.S. counterpart Donald Trump this week. Two friends of mine, had the contract with the government of India to provide wireless internet to the entire country back in 1990. 798, and I remember thinking back then, I mean, you know, we had no iPhones, we had no smartphone, we barely had cell phones, and Chuck was just rich. Don, on the other hand, was literally a rocket scientist. He programmed satellites and did all kinds of stuff. But he was a great guy. He was a great friend. Unfortunately, he passed way too early. And I lost touch with Chuck. I do know that Chuck had, because Don got sick, very, very, very sick before he passed away, Chuck cut him out of the agreement because he was no longer able to work. And so the day I found that out, I guess you could say that mine and Chuck's friendship parted ways. Don was just the most incredible, loving, giving guy. Left behind a wonderful wife and 12-year-old son. He was sick for a number of years, but he actually passed while I was in Africa. When I got the news via email while I was there. That was a tough one. He certainly wasn't the first person I had ever known to pass away, but he was the person I was closest to at that point in my life. So, and I remember asking them, guys, I think somebody scammed you guys. They sold you the contract to provide wireless internet to India. I mean, come on. Does anybody in India even have a computer? I mean, I was so naive. I mean, these guys knew exactly what they were doing, man. All right, last of the news. Pandora CEO and founder Tim Westergreen is reportedly planning to step down, according to Recode. Westergreen has been running the streaming music service since 2016, and the company has not found a replacement yet. Pandora. It was an interesting idea. Honestly, I'm a little surprised that they're still around. I don't know that they ever became profitable, but we wish them the best. All right, on the S&P, we've already talked about it. We said to consider buying 2434. I drug out the thing a couple times so you could get a screenshot. Consider buying 2434, ran up 13.5 points, $50 per point. The Dow, consider buying 21330, ran up 124 points. Important prices, important areas are almost always tested. You see on the S&P, we came back down and tested it right on the nose, and legally speaking, it needs to go one tick below the trigger. It did not. It hit it right on the nose. This one, actually went 2 ticks or points, because the Dow doesn't do ticks, they only do points. It went 2 points below the trigger, and so that did qualify it for another trade. Soybeans, there was no long trigger up at 914. We're now in the X contract, November beans, and the swing low was 903.75. That's a whopping 1 1/4 points. Okay, now I've been bragging about how November beans are the kindest beans of all. Well, I guess we'll just have to wait and see if that holds true. Yeah, that's the deal. Bonds, consider buying 156.26. Ran up 14 ticks at 31.25 per tick. Keep in mind, if you follow the Concierge Trade Alerts, if you use the Concierge Trade Alerts, you'll never get out at the swing high or the swing low, because part of the training teaches you to trail your stop. Okay? You're either going to trail your stop or trade to a fixed target, which means if you hit the fixed target, you're going to leave a little something on the table. And if price pulls back and takes out your trailing stop, then again, you're going to leave a little something on the table. I guess it's all self-explanatory. Gold, we looked at, sell 1255. Again, that swing trade idea from Friday afternoon cost us $2. You know, we bought a fishing license for $2 and spit the hook. However, saving grace last night, we said to consider selling 1255. That finally triggered around midnight and then went sideways all the way up until 4 a.m. Eastern, and that's when it got some wind beneath its wings. I guess that would be for a stock, for something moving up. But the bottom fell out. That's, I guess, better terminology. And it dropped $1,800 plus per contract. And interestingly, at 4 a.m. Eastern, it did it all in 30 minutes. These are 30-minute candles. Who saw that coming? And I'm curious if there was some global news that came out at that time. I don't have the time to go and chase it down, but between now and tomorrow, I'll try to find out. Something had to have, you know, that's why I use investing.com. I use their economic calendar, because if there was a news event somewhere in the world, Germany, Europe, wherever it might be, at 4 a.m. Eastern, it will be on that economic calendar. And if it's a high impact event, it will say high impact event. So we'll try to remember to chase that down tomorrow. NQ, NASDAQ. Okay. All right. On the buy side, 5807. 5807. Now, I didn't get the alerts out until about 20 of 7, so I'm just using the 7 o'clock candle, 1900 hours. Right there. Buy 5807. Swing high was 58.52. So that would be 45 points at $20 per point. So that would be $900 per contract available. That's what the market made available. Now, we didn't have any major pullbacks. I mean, it's possible that after this run up here, on this pullback right here, depending upon how tightly you're trailing your stop, you could have got stopped out there. Certainly. And, you know, in each one of these green candles, there's back and forth. So, again, the market made $900 per contract available based on how closely you were trailing your stop will determine what you were personally able to take out of the trade. The sell side of the NQ was 57.89. 57.89. Okay, so 57.89. Okay. Swing low 68. So 68 to 88, that'd be 20, so it'll be 21. Times $20 per point. And then important prices, important areas. So looks like it's trying to put in another leg to the downside. Now if we look left, see this low here. The last time buyers were able to buy at this price, what's the low of this candle? 57.63. The last time buyers had a chance to buy 57.63, they drove it all the way up to 58.52. So as price approaches the low of this candle, right here, is 57.68. The low of this candle is 63. So buyers came in 5 points early and started bidding this thing up. Why? Well, because they were hoping for a repeat of that. Is it possible that they might still get that? Yeah, it is. I mean, they've had a nice bounce already from 68 where they started buying. They already got it up to 58.06 and a quarter. So they've had a nice bounce. We'll see what happens on the next go around. Next, we've already covered gold. Oh, that's the daily chart we're looking at. That's gold. We already looked at that. NQ, we just looked at that. Crude oil, we haven't looked at that. Okay, GCLQ. Consider buying 43.45. That ain't right either. Yeah, I guess it is. Okay, 43.45. The first run up took us to 60, so that's $150 per contract available. From 45 to 65, that's $200 per contract available. This, well, quite frankly, unless you're able to find a better entry on, say, a 5-minute chart, this is a 30-minute chart, there's no way you would take this trade based upon the size of the stop loss that you have to utilize. In fact, same could be said over here, but the one trade that actually, to the long side, that actually had the most meat on the bone, which wasn't a lot, $200 per contract, also had the least amount of risk. That's a theme you'll see played out again and again and again. Okay, the sell side on crude was 42.70, which is way down here. 42.70. The swing low was 63. $70 per contract available. Now, again, you've got to take a look at where the stop would go, and you say, oh, well, that's too much risk. So then you go down to a smaller time frame to see if you find an acceptable risk based upon the parameters that we talk about, either in mentoring sessions or in workshops or wherever we might be. And if you can't find an acceptable entry on the 30-minute or the smaller time frame like a 5-minute, then you pass, you walk away. That's the beauty of having 8 markets, 2 trades per market. That's 16 opportunities potentially, and the fact that important prices, important areas are almost always tested. Whoa, more opportunities some days than you could shake 2 sticks at. But you must have the patience and the discipline for those opportunities to present themselves. Okay? Very important to remember. I wrote last night, patience and discipline are the 2 most important tools in a trader's toolbox. Okay, we're down to the Russell, and that is it. Okay. And I think these are, I don't even think those are last week's zones. I think they're the week before. Never change. No, they are 14, 10, 11. That is, you know what? They're last week's zones. Let's just get them out of here. Okay. So, last night on the Russell, consider buying 14.17. Okay. And so, 1960. From 1417 to 19, that would have once upon a time been two. That's $130 per contract. And that's about $150 per contract. On the short side, so 1409, we got down to 1406.60. So that'd be 24 ticks, 200, maybe $120 per contract available. So pretty quiet on the range for the Russell. Okay, so that takes us through everything. Start to finish. And I gotta go do a mentoring session. Hey Pete, take care, my friend. I gotta go too. Guys, thank you all for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.